Welcome back. Futures are indicating a sharp sell-off at the start of trading this morning, down about 300 as we look ahead to a big week. We've got lots of economic data out. It is the end of the third quarter. It is the end of the funding for the government. Durable goods orders are out, core capital goods, consumer confidence, all coming out tomorrow. We got the GDP later on in the week, and then, of course, the personal consumption index out on Friday, the Fed's favorite inflation indicator. Joining me right now is Mahoney Asset Management CEO Ken Mahoney. Ken, great to see you. Thanks very much for being here. What are you expecting as you look at the end of the third quarter? What kind of positioning might you expect on the part of investors this week?
Well, for the big investors, they're probably going to do a little window dressing, Maria. You know how that goes at the end of the quarter. Oh, we didn't have any stocks. We didn't have anything. We're all in cash. So I think like that. But I think what investors are dealing with right now is really like the perfect storm, like from the movie. I mean, really hit from all different sides. Rising inflation, the Federal Reserve, behind the eight ball, obviously overreacting to last year's myth, now having to raise rates, nonstop aggressively. And then the other shoe to drop, unfortunately, this perfect storm scenario, Maria, is out of earnings. I mean, pretty soon we're going to close out the quarter, as you said, this Friday. And a few weeks from then, we're going to get the reports. And, strong dollar is going to hurt a lot of these multinationals. So that's the concern right now for investors. The ones that are obvious, of course, is inflation, the Federal Reserve. The one maybe not so obvious is a stronger dollar, weaker earnings.
Yeah, we got a all-time low on the British pound this morning, and the dollar continues to soar. But, Ken, we've been hearing these, dire economic predictions from so many people, whether it's Jamie Dimon and the economic hurricane that's coming, or Ray Dalio and the recession that is already here, Larry Summers, same thing. We keep hearing all about this, that it's going to start turning ugly in the fourth quarter. Fourth quarter begins next week, and look at the demand destruction we've seen in a number of industries already. Housing, for example, we've got a big week of housing data. We've got the Case-Shiller index out for July, new home sales out for August, out tomorrow. The 30-year fixed rate mortgage hit 6.29% last week, the highest level since August 2007, Ken. So what are you expecting in terms of the macro story, and does it begin in the upcoming fourth quarter, this economic sharp weakness?
Yeah, look, we do a lot of this about the markets and stocks and bonds and all this, ETFs, closed-end funds, strategies. At the end of the day, most of your viewers' biggest asset is their home. And they're seeing their neighbor that, who once were offering, sell their home, now slash $50,000, $100,000 off their home. Makes you feel, I'm hearing from realtors that used to have 30, 40 people showing up at a showing, and now it's 2 or 3 people schlepping around looking at a showing. And that has a big impact, right, Maria? Because those people are not going to get appliances now, or again, let's say upgrade their kitchen or put a deck on. You start feeling right there. So it's just the opposite of wealth effect. And, maybe this is the intended consequences or unintended consequences. But again, below this big cannon out monetary policy, the real inflation we have in this country is more about supply chains. You have supply demand issues with oil. It's not by blasting rates and then impacting that in the real estate market, but here we are.
So what do you do as an investor, Ken, as these markets weaken, as the macro story slows further? The NASDAQ is down better than 5% just in a few weeks. The technology sector facing the worst 2-week stretch since the start of the pandemic. Is this an area to look for bargains, or do you want to step away from stocks for a while things settle out ahead of these economic upset expectations?
Well, look, you always want to keep your powder dry. We're just trying to get alive on the other side of this thing, okay? Have your principal with you. But a trader mentioned a couple of weeks ago here, and I'll still come back to it, what you can do. Look, some people feel it's too late to short and too early to buy. And I see a lot of people with short portfolios now, okay? And a couple of weeks ago, I mentioned a pair trade. A pair trade basically is when you buy a stock and you short a stock. You keep yourself market neutral, market agnostic. And the one I mentioned was actually Microsoft long for all the reasons, 69% margins, they're buying back stock, raising dividends. And the short was Meta. Everything they can do is softening earnings going forward, switching into this metaverse, which is going to be niche. And probably 2 weeks ago, again, you have Microsoft down 5% the last 2 weeks, but you have Meta down 18%. That's that's about a 13% pickup in 2 weeks by buying. And I think that trade can continue for some more time. Long Microsoft, short Meta.
All right. We'll be watching that trade. Ken, good to see you this morning. Thanks very much.